Hello, welcome to our monthly performance monitor. My name is Barney Hawkins, Investment Director at True Potential. As we look back over the year so far, investors have experienced something not seen for many years, an increase in volatility. Markets around the world have eased back on concerns around the prospect of higher interest rates and fears that the charging of import tariffs may escalate into a fully blown trade war between the US and China. Although those fears are valid, it has to be remembered that it's in the interests of both countries to come to an agreement, and on balance we think it more likely that a deal will be done that satisfies both the US and China. Our managers too are generally constructive on the overall growth picture, but are conscious that growth is slowing from what has been an exceptionally high level. Looking forward, central bank policy is still very much in focus. US interest rates are at levels geared for 10% unemployment, not the low levels of 4% we're currently seeing. However, investors have come to terms with the prospect of higher interest rates, which is positive, and reduces the likelihood of market turbulence as interest rates slowly revert to more normal levels. In the short term, President Trump's introduction of tax cuts at this stage of the economic cycle may be inflationary and may require higher interest rates. However, over the longer term, demographics, globalization and technical innovation should serve to keep a lid on any more enduring inflation threat. At an asset class level, our choices show a preference for funds with a greater emphasis on equities. The technology sector has been very much in the news, with stocks such as Facebook struggling as regulation and data privacy laws are questioned. But with corporate earnings coming in generally at record levels, stocks are now on much more sustainable valuations. Momentum in markets is not so strong, and there is a feeling that we're at something of an inflection point, with a change in leadership likely in both asset class and style performance. Growth as a style has performed well, but there is evidence that this is slowing, and as investors reevaluate the financial landscape, our value managers are finding opportunities in equities that have been out of favor in more defensive sectors such as utilities and telecoms. Whether this is the start of a new leadership remains up for debate, but some of our managers are definitely putting more emphasis on value-based opportunities. In conclusion, there are clearly risks out there, and diversification is therefore key as we navigate through differing market conditions. Our managers have the ability to invest in different countries, currencies and asset classes, and these will all help to mitigate risk for your investments. The True Potential portfolios take this a step further, investing in differing manager styles, something unique in the marketplace and a way to help guide investors through a changing market environment. Thanks for listening, and we'll see you again next month.
Hello and welcome to today's review of the True Potential portfolios. My name is Chris Leyland and I'm an Investment Director here at True Potential. So the format for today is that I'm going to spend the next few minutes talking about our flagship investment products, so that's the True Potential portfolio range. So firstly, let's start by discussing the performance of the portfolios. We'll then look at what are the key themes that we're seeing from our fund manager partners, and finally discuss what changes have been made over the month to the portfolios. The month of April has been a strong one, with the portfolios all showing positive returns, rebounding after the pullback we saw in February and March. The two income portfolios have performed particularly well, boosted by the strong performance of the True Potential Threadneedle Monthly Income Fund with its UK bias. As we look further out, performance is excellent, with the aggressive portfolio now showing a return of nearly 40% since launch. Looking at markets themselves, equity markets have been the main drivers of return, with the UK leading the way, with the FTSE 100 up around 7% for April, bouncing back after a weak first quarter, enjoying the benefits of a weakening currency for those large global earners. Within bond markets, returns were muted at best, with UK gilts the main laggard, an area in general the True Potential portfolios are less exposed to. Moving on to the performance of the underlying funds that make up the portfolios, the True Potential Schroder fund range has shown good returns, with their low weighting towards bonds helping to drive performance. The True Potential Close Brothers fund range has showcased good stock picking, with their holdings in Facebook and Visa doing particularly well. The portfolio's overweight position to Close Brothers has been a really benefit for April. Okay, so let's move on to the markets and look at the key themes that we formulate after speaking to our investment partners. And the general view is actually one of constructive growth, with market participants adjusting their expectations to a higher interest rate environment. Trade wars between the US and China look less likely, as it's in the interest of both parties to come to an agreement rather than to penalise each other with tariffs. Okay, so lastly, I want to just look at what changes we've made to the portfolios over the month of April. So firstly, Allianz, we've reduced overall allocations. Allianz use what we call a momentum style, and that's something that works very well when there are clear trends and markets are rising. However, as we look forward through 2018 and towards an environment of rising interest rates and interest rate normalisation, it was felt that this style could come under pressure compared to some of the lower risk managers. Schroder, we have reduced allocations as well. Taking an asset allocation view, the funds have been positioned very well, but stock selection struggled. The fund range also carries the highest cost out of the True Potential Wealth Strategy fund range. Close Brothers, overall allocations have been reduced. The bias towards growth has worked very well. However, with growth stocks starting to face headwinds, it's unlikely that they'll provide similar returns to those seen in 2017. Despite the reduction though, Close remain at an overweight position within the baseline portfolios. Moving on to SEI, overall allocations have been reduced. The fund has a less flexible strategic asset allocation, making it less responsive than other TPI funds. Moving into a changing market environment, we have a preference for more agile funds. 7IM, we've increased allocations towards 7IM. They have a larger allocation towards alternatives, particularly as a substitute for bonds. The alternatives allocation looks to offer stable, above inflation returns and performance uncorrelated to either bond or equity markets, which should help mitigate risk in changing market conditions. So next, Goldman Sachs. So we have increased allocations, and that's through the True Potential Goldman Sachs Balance Fund. The fund is positioned short duration, less sensitive to movements in interest rates, and is well diversified with alternative investments, which should help to diversify risk. UBS, overall allocations have been increased. The fund has changed its composition to be more suited to the current market environment, adding to the existing alternative strategies within the fund range. Okay, so that's everything on the changes. In conclusion, what do we know? We know that diversification is key as we navigate through differing market conditions, and that's something that we can offer to a new higher level through the True Potential portfolios. That's what we call advanced diversification. Okay, thank you very much for listening, and I'll speak to you next time. Thank you.